There's one boring change you can make to your mortgage. Not to how much you pay, just to how you pay it. And it quietly deletes almost 6 years of payments and about $116,000 of interest. You don't need a raise. You don't need to find hundreds of spare dollars a month. Nothing about your budget changes. The whole trick works because of something that's probably already true for you. You get paid every 2 weeks, but your mortgage bill only shows up once a month. Hiding inside that little mismatch is a full extra payment every year. One you will never feel leaving. I'm a licensed mortgage broker. I've watched this exact move work on real loans for more than 20 years. And today I'll show you the real math on a $400,000 mortgage. The companies that will charge you $400 for arithmetic you can do for free. The trap that catches people who set this up the wrong way. And the 3 free ways to do it yourself this week. Quick note first. I'm a licensed broker, but this is education, not financial advice for your exact situation. And one quick favor, tap that like button for me, please. It costs you nothing. It takes 1 second, and it generally helps my channel. Okay, here's the loan we're going to fix. $400,000 30-year fix at 6.5%. The principal and interest payment on the loan is about $2,528 a month. And buried down in the paperwork is the number nobody says out loud at the closing table. Make every one of those $360 payments and you will hand the bank about $510,000 in interest. Read again. Borrow $400,000, pay the bank over $900,000. The interest costs more than the house did. That's the deal you signed. And the bank is very comfortable with you never thinking about it again, just quietly mailing the payment once a month until you're old. Today, we're going to mess with that plan. Here's the trick, and watch how gentle this is. Take the monthly payment of $2,528 and cut it in half. That's $1,264 a month. Now, instead of paying the full amount once a month, you pay that half every 2 weeks, right on payday. And your gut says that's the same money, right? Half now, half in 2 weeks, same thing. Except it isn't. And here's the sneaky part. A year has 12 months, but a year has 52 weeks. So paying every 2 weeks means you make 26 half payments a year. And 26 half payments is 13 full payments, not 12, 13. Somewhere in there, you made an extra entire payment. And I promise you, cannot point to the month it happened because there is no month where you wrote a bigger check. It works out to about $210 of extra principal every month without you ever deciding to spend $210. Your paycheck rhythm did it for you. Now, what does one extra payment a year actually do? Because honestly, it doesn't sound like much. Here's the thing that an extra payment doesn't touch is interest. Every dollar of it lands straight to your principal, the actual balance. And when the balance drops, next month's interest charge drops with it, which means a little more of your next regular payment is principal too. It snowballs quietly, automatically, in your favor for once. So on your loan, here's the scoreboard. Keep paying monthly like the bank planned. 30 years, about $510,000 of interest. Switch to the bi-weekly rhythm. The loan is paid off in about 24 years, almost 6 years early, and the interest bill falls to $394,000. That is roughly $116,000 that stays in your family instead of going to the bank. From a change from your budget literally cannot fill. Real quick, while that number sinks in, if the math just made something click, tap that like button for me. And if you want the money side of owning a home, explain straight like this. Hit subscribe too. Here's the honest reason I ask. This channel is still small, and every like and every subscribe tells YouTube to show this video to the next homeowner staring at a 30-year bill, wondering if there's a way out. It's free, it takes 1 second, and it genuinely helps these to keep coming. Okay, now I have to show you the 2 ways this exact trick goes wrong, because there's an entire industry counting on you not watching this part. Way number 1, it can go wrong. You pay somebody for it. The banks know this math cold, and there's a whole row of companies that know you don't. So they package this exact trick up and sell it back to you as a bi-weekly payment program. You'll get letters about it, official looking letters, sometimes with your name, your own lender's name printed right on them. The price of admission, usually a setup fee of $300 to $400. Then a processing fee tacked on to every single payment, 26 times a year, year after year for the life of the loan. And what do you get for all that money? They divide your payment by 2. That's it. That's the entire service. You'd be paying hundreds of dollars for arithmetic you can do in your head. And plenty of these programs don't even send your money in bi-weekly. They hold your half payments and then send it to your servicer, 1 normal payment a month, plus 1 extra year. The exact thing you're about to learn to do yourself for exactly $0. So here's the rule, and it has no exceptions. Never pay a fee to pay your own mortgage. But way number 2 is the one that actually burns people, because it punishes the do-it-yourselfers. Say you skip the program, you're fired up after this video, and you just start sending half your payment to your mortgage servicer every 2 weeks. Simple enough, right? Well, here's what actually happens on the other end, and almost nobody knows this. Most servicers are not set up to receive half of a mortgage payment. Their system is built to accept one thing, a full payment. So when your first half shows up, it usually doesn't get applied to your loan at all. It gets parked in a holding tank. The industry calls it a suspense account. And it just sits there, not reducing your balance, not saving you a dime of interest, doing absolutely nothing until the second half arrives. The system snaps the 2 together into 1 normal payment, and you end up exactly where you started, 12 payments a year with extra steps. And if the timing gets sloppy, it's worse than nothing done wrong. A lonely half can even get read as a partial payment. And a partial payment is a phrase you never want anywhere near the mortgage industry. So no, don't just start firing halves at the bank and hoping. Here's how you actually do it. 3 free ways. Pick the one that fits how your brain works. The math is identical on all 3. Free way number 1, the official route. Call your servicer and ask one exact question. Do you offer a bi-weekly payment plan? And is it completely free? Plenty of servicers will happy to set a free bi-weekly draft. They pull half from your account every 2 weeks and apply it correctly. If it's free, enroll. and this whole video runs on autopilot. If there's any setup fee at all, say no thank you and hang up. Because the next option does the identical math with no setup at all. Freeway number 2, and honestly my favorite because nothing can go wrong. Take your monthly payment and divide it by 12. On your loan, that's about $210. Add that amount to your regular payment every month and mark it in the payment portal or on the check payment, apply to principal. That phrase matters. Say it exactly. You're still making one payment a month, like always, so there's no suspense account and nothing for the system to misread. But across 12 months, those little chunks quickly add up to the same one extra payment a year. Same 6 years back, same $116,000, no program, no enrollment fee, no permission needed. And in my freeway number 3, for the hands-on type, keep the halves in your own bank. Every payday, move half the payment into your savings account and pay the mortgage monthly out of that account like normal. Here's what happens. You're feeding that account 26 halves a year, but the mortgage only drains 24 of them. So once a year, there's one full payment extra sitting in there. Send it in, marked applied to principal. Same result with a bonus. Your money stays in your hands until the moment you send it, in case the roof has other plans this year. And here's the part I want you to hold on to. The reason this beats every tightened your belt lecture the internet loves to give, advice that finds you to find new money, dies on the first tight month. This doesn't need new money. It rides the rhythm your life already runs on. Most of us get paid every 2 weeks. So paying every 2 weeks feels like nothing at all. And understand that you're earning while it feels like nothing. Every extra dollar you send kills principal. That's being charged at 6.5%. There's a guaranteed 6.5% return on every one of these dollars. No market crash, no luck, no waiting. Guaranteed, boring, and locked in. Boring is underrated. Now, 2 honest warnings before you set anything up. This is part that protects the whole plan. Warning number 1, whatever road you pick, call your servicer first and ask exactly how extra money gets applied. You want the words applied to principal. Get it in writing if you can, because some servicers by default take extra money and push it towards next month's payment instead, which just prepays your bill. It doesn't shrink the balance, it doesn't cut the interest, and it quietly kills the entire snowball. One 30-second phone call protects 6 years of results. Warning number 2, if you're carrying credit card debt at 20+%, that fire gets put out first. A 6.5% guarantee is beautiful, but it makes no sense while something else is burning you at 3 times that rate. I've got a whole video on that exact, which debt to attack first, and in what order. It will be waiting for you on the end screen. So let's put the whole trick on one page. A $400,000 mortgage, 30 years at 6.5%. Nothing about your life changes. Same house, same rate, same paycheck. The only change, one extra payment's worth of principal slips in every year, riding the paycheck rhythm you already have. Half a payment every 2 weeks, or about $210 extra a month, marked applied to principal, or one banked extra payment a year, whichever version your brain likes. And the result? paid off in about 24 years instead of 30. About 394,000 of interest instead of 510,000. Almost 6 years of your life and roughly 116,000 back on your side of the table from a decision you make once this week and then never think about it again. That's the entire secret. Not finding money, redirecting the money you already have. And remember, this is education, not personalized advice. Your loan, your rate, your servicer's rules, check your own paperwork before you move real money. Now, before you go, I'll ask you straight. If watching one boring calendar change delete 6 years of mortgage payments just changed how you look at your bill, hit that like button and subscribe to the channel. I don't say that as a throwaway line. This channel is still small, and every single like and every subscribe tells YouTube to show this video to the next homeowner who believes the only way out of a 30-year mortgage is 30 years. That person might be someone you love. So if I've earned it today, tap the like button, hit subscribe for me, and drop me a comment with your loan balance and your rate. And I'll tell you roughly what one extra payment a year would do for you. I read every single one. I'll see you in the next one.